In this video, we're going to talk about Ocugen, trading under the ticker symbol OCGN. Ocugen is a medical company founded in 2013 in Malvern, Pennsylvania. It operates in treatments for ocular issues, which is hinted in the name of the company, Ocugen. It also carries a major contract of distribution for a major Indian company in the United States. Its appeal for the market is the expectation that the authorities will allow the distribution in the short term, which will increase its cash inflows and encourage more upward momentum. Compared to the other better-known companies in the sector, it's relatively unknown and does provide more potential upside in the future if there are catalysts present. Aside from that, the company is also improving its profitability with its other operations and does offer a stronger appeal to the market for capital that is willing to tolerate a high risk with its investments. The trading volume of Ocugen has recently been 8.6 million shares, compared to an average volume of 13.6 million shares. Over the previous 52-week period, its price has been fluctuating between $1.40 and $18.77. The market cap of Ocugen is currently at $808 million, compared to the enterprise value of $1.3 billion. The difference between the market cap and its enterprise value is the premium or discount financial market is willing to allocate itself to the company based on the current fundamentals, leverage, the market mood, and macroeconomic trends. Some of the examples of impact by leverage is if the company has a lot of debt, then the market may feel uncertain about the company's capacity to pay back its interest and principals, which in turn may negatively impact its profitability, attractiveness, and solvency. Another key element to understand is the asset composition of many companies, and it is especially true for growth-type companies. For many of those, one of the most significant assets they own is called goodwill. It's basically our wish to assume that this company will do better than its competitors because it has a stronger brand recognition, better management team, or bigger following online, and so on. In other words, it's not a tangible asset that companies can use, but it's something that is included in its asset valuation, and this is why many companies may be perceived to be trading at a discount, because the market cap is lower than the enterprise value, given that the enterprise value includes the goodwill valuation. In comparison to its historical price fluctuations, the stock is 2.3% higher than the 1-month low, 2.3% higher than the 3-month low, and 183% higher than its 52-week low. In terms of the options market, which often gives a hint on the market sentiment on where the stock price is likely going to head toward, the implied volatility here is 145%. compared to a historical volatility of 94%. The put-call volume ratio is currently at 0.07. The most recent volume of options traded has been 18,000 contracts within a day. The most recent volume of options traded has been 18,000 contracts within a day, compared to the 30-day average volume of 23,000. In terms of the open market, the most recent volume of open interest has been 170,000 contracts, compared to a 30-day average of 210,000 contracts. In terms of its shareholder structure, institutional shareholders hold 33.5% of its outstanding shares. The biggest shareholders include BlackRock, State Street, and Vanguard. The relevance of shareholder structure is important to determine if you should be holding the stock long-term or to view it as a short-term play. If the stock is mainly held by retail traders, then it may be a sign that the stock lacks the depth to justify long-term holdings. Of course, there are a lot of exceptions. Usually the consensus should be around 25 to 30% at least to be viewed as a sound investment and not just a short-term trade. Let's also look at the short interest present in Ocugen, which is the amount of positions aiming to profit if the share price falls lower. Sometimes, if there are significant short interest in the total volume, it could be a sign that there's an organized shorting operation going on, like what happened to GameStop and AMC. The current short interest is 27.8% of the total float, and 54.3% of the dark pool transactions. In other words, there are arguments here to say that there is a short operation going on with Ocugen, but we just don't see if there's a short squeeze at side yet. And they can be used as one of the elements determining what should be our overall approach. The oscillators show 0 sell, 6 neutral, and 5 buys, with an overall tendency of buy. The moving averages show 13 sell, 1 neutral, and 1 buy, the overall tendency here being strong sell. The moving averages can be used to determine if the stock is overbought or oversold. Regarding the pivot points, which are levels of support and resistance sprinkled in the price trends, the support levels are $2.58, $3.55, and $4.15. For resistance levels, they are $6.08, $6.68, and $7.64. We have covered Ocugen on this channel before, and it's really been a while since people have focused their attention on the stock. The fundamentals regarding the company over the past few months have been encouraging, I would say, and I would even say that they have been bullish for the company, or more specifically, more bullish for the underlying contract that they're supposed to be distributing in the US. With that being said, when we look at the stock performance, we can't say that the market is necessarily reflecting any bullishness in response. The stock has been correcting, and I would say that it's even been nosediving since late 2021, from a high of around $15 to below $5 nowadays. And we're still too early to assume that the correction is behind us. A major psychological barrier that provided support during the better part of 2021 was $8, and the stock price has since been pushed way below that price level in a fairly speedy manner without too many obstacles. What this means is that the capital that once was in Ocugen may now be looking elsewhere for more interesting opportunities. I mean, after all, what was interesting in 2020 may not be as interesting in 2022, even if the news are moving in the right direction. Now, I believe that this is the kind of timing that we should start to focus on Ocugen, because the lower it goes, higher the potential gains you can make. Of course, don't get me wrong, it's a tough market here, and the current support is located near the $2 level, which is a very steep discount compared to if we were to enter now. This is why I would suggest to keep Ocugen on your watch list and to follow up on it in its price action over the next couple of weeks. It's possible that the stock will keep grinding until the $2 level, at which point I would definitely recommend to buy. Until then, it would be interesting to see if there are any support levels. With that being said, I would recommend a maximum exposure of between 1 to 3% of your portfolio in Ocugen. Your investment should also take into consideration the market conditions and the surrounding sentiment to determine what kind of asset should be picked, for how much and for how long. First of all, the financial market doesn't reflect the real economy. If the stock market is doing great, it doesn't necessarily mean that companies are hiring people, that salaries and living standards are rising. Sometimes it's the exact opposite that happens, because the stock market is a pool of money where things come in and come out, going to different sectors to be placed. The capital may be used to be invested in a company to improve its efficiency and productivity, but it can also be used to buy up shares and assets in order to make a profit. This phenomenon is called financialization, and it means that the more money is being used for non-productive purposes like merger and acquisitions, fees to financial sectors, buying back equity, and so on, the less there is for the real economy. Another way to put it is that ever since 2008, the Dow Jones has increased significantly. But people don't necessarily see this growth in tangible ways. This is why we gotta be careful with the assumptions that rising stock price means better outlook for the company. Sometimes it doesn't mean anything other than the fact that the asset is getting more expensive to be bought and that their yields is going down as a result. Additionally, some new phenomenons are now palpable such as the creation of new bubbles, the participation and influence of retail traders in specific situations, and the anticipation of a massive recession or at least pullback. Bubbles have always been created on and off over the past few centuries, but nowadays it's quite interesting to see the speed at which an organic bubble can be created back in 2020. Because almost immediately after the major collapse of the financial market back in early 2020, the market decided to pour a massive amount of capital in the EV sector and anything that's related to it. Stock prices went up the sky, and for a moment, it really felt like any EV stock can be a golden goose. Another way to say this is that any SPAC with an EV company in it will become the next Tesla, right? Even if it didn't last that long, this episode definitely allowed the market participants to park a lot of their money in a sector, leaving it with either a lot of profits or at least avoiding incurring large losses because they left their money in the blue chips or the sectors heavily affected. The involvement of retail traders in companies has also been much more pronounced in recent months, especially in the scenarios of a short squeeze. Companies may have short sellers who believe that the stock will decrease in value. The short squeeze consists of buying the stock price up to force the short sellers to recover their positions, which will then also trigger an even bigger increase of stock price as a result. Of course, I'm not saying that this is always rational. I'm not even saying that those companies always have a convincing narrative. So, for example, if you play video games, ask yourself if you personally bought all your games at GameStop, knowing that you can buy the same games just online in the comfort of your home. But nevertheless, retail traders do have a much more significant influence in the stock price nowadays, for the better or worse. Personally, I think that as long as the volatility is high or gets higher, it'll create more opportunities. The final phenomenon is the anticipation of a recession. Many people have been expecting something of that sort to happen ever since 2008. There were quite a few companies that were supposed to go bankrupt because their debt structure is no longer sustainable or that their business model is bad. But overall, the system was able to hold its ground, especially in the North American market. This is partially because capital around the world often choose to come to the American capital market when things get heated back home. This is especially the case when geopolitical tensions increase around the world. In order to make sure that capital can provide a steady return without being affected too much by the central bank policies and inflations, I think that this phenomenon will increase its pace as time passes by, at least for the next couple of years. This is why we will likely see the blue chips continuing their ascension, even if for the growth stocks things may be a lot more nuanced. The bottom line in all this is that the environment is getting more uncertain and volatile in a context where asset yields will probably remain quite low, because the real economy cannot be improved with just money. As far as we're concerned, this means that the patience would be a great virtue for all of us, and that there will be plenty of opportunities to eye for better prices. With that being said, always make sure to keep your positions diversified and keep the risk level under check. Speculative positions should play a small part in your overall portfolio. I would say it's better to keep them below 10 to 20% of your total holdings. Thank you for watching. If you like my content, please like, comment, and subscribe to my channel.